X, and then Good morning and welcome to the Friday Stack. We have our good friend Adrian Morris with us, who's always we have a pleasure having on. Always value opinions, always value his, I think, ability to get out there and be unique and go against the grain when you want to. So, how are you doing this Friday?
I'm doing well. I'm happy to be here again. It's been a while since I was on.
Yeah, Avi, how
Joey's
you
got
doing?
not as good as you. I got the blue jacket this time. I'm trying to look a little more professional, but you got the Masters green going on, which I'm jealous of. But
Yeah, that was a good time for you to be like
overall,
a
good.
good Happy Gilmore quote of the gray jacket, green jacket. Who gives a shit?
The term is gold jacket, green
Gold
jacket. Who gives a
jacket.
shit? But neither here nor there. Yeah, Adrian, great to have you back. It's been certainly a while, a lifetime in Bitcoin years since everything moves so quickly. But what's been on your mind? Have you been heads down with Bitcoin? I know you're obviously a founding member of True North. Have you been watching AI more closely? What's going on in your world?
Well, I've been mostly busy with my day job. I've had a lot of projects that have been ramping down, so a lot of deliverables to get through. So that's why I've not been on live streams as much. That's why I haven't been streaming as much in general. But now that things are slowing down again, I'm trying to get back into it. I've obviously been keeping an eye on MSTR, keeping an eye on Bitcoin, keeping an eye on the space in general, but also keeping an eye on AI. And it's been really interesting watching how companies are starting to change their overall approach to things. I think that's the biggest takeaway that I can have from the last 4 months or so. Companies are starting to, I wouldn't say trying to pivot towards AI. I think they're trying to understand how they can implement AI. And with that, I think a lot of companies are realizing that they're not ready for AI. And that was the trend I was seeing 6 months ago and 9 months ago. And it's only more apparent now because I think a lot of companies are getting caught up with what gets said on social media, what gets said in the news, what gets said online, and what versus the actual reality of what these tools actually mean. If you want to
Mhm.
implement them, if you want to bring them on board, they're two very, very different things. So that's kind of in my world.
Do you feel like it's I'm hesitant to say the word bubble because I certainly did not think it's a bubble, but and I don't think you do, but the way you're phrasing it in terms of the adoption from a lot of these enterprises, is it a bubble in that sense where we're just not quite there yet? It's going to take another year or so, or do you think some of these enterprises just will, let it pass them and they're not going to implement it as much?
No, I don't think it's a bubble. So I did say this on another stream I was on, I think last week. If there's any risk of bubble-ish kinds of dynamics percolating, I would say it's within the next 6 to 18 months. And the reason why I say that is that we are reaching a point where compute and data centers and energy are starting to reach critical mass, and there needs to be further build outs. But overall, if the news is to be believed and just the general things I've been hearing, some of those data center build outs are starting to be rolled back a bit. And I think the big players in the space, investors and overall people are starting to get wary of all of the capex and opex spend that's going into all of these build outs and all the initiatives behind them, and they're looking for more ROI. And my guess is going to be, again, at macro level for this, is that we're going to see an increase in price for everything from token usage to monthly access fees to max subscriptions to everything. I think OpenAI has already pivoted away from Sora. I think that's indicative of some of this. I can see Claude, Gemini, uh, Grok increasing, subscription fees to make up some of the shortfall because markets are forward looking, right? So that increase allows them to change projections going forward in terms of projected revenue, things of that nature. So that's the macro. The micro, in terms of enterprises, like you were talking about, the and I've said this so many different times over the last year, the biggest challenge is still reluctance to onboard these tools because companies do not want to give much better access to these systems. With that comes information security bottlenecks, then internal audit bottlenecks, and internal compliance bottlenecks. Those are the four things that I'm running into head first. Once I get past those, the other thing I'm running into head first is a lack of preparedness. Companies are thinking that, oh, we have good processes, oh, we have good data, oh, we have this, oh, we have that. We want to onboard AI. How do we do it? It's like, okay, well, then do you want to do cloud or do you want to do on-prem? Those are two very different things. If you go cloud, and a lot of companies are starting to default to Copilot, which is not the way to go.
Just gives things away. Yeah,
it is not the way to go. But because it's easy to integrate into their existing systems, they want to default to that. So that's a lot of what I'm seeing at the mid-sized companies. Smaller companies, they're more adaptable because that's more of a startup environment, right? Typically for the first 5 years or so. So companies that I'm having conversations with on that, they're more inclined to do something that's like on-prem. So whether that's a Gemma model, for instance, Gemma just recently rolled out, they want to do on-prem, but they don't have realistic expectations into what that requires. First, you're not going to be able to use your rinky-dink standard issue enterprise laptop that you've been handing out to your employees, right? You're going to need if you want to actually run something like Gemma at full capacity locally, you're going to need a machine that's going to cost you about $7,000. So there's that. Then there's also the fact of now that you've done that, what are you even going to do with it? How are you going to integrate it into your systems? What are your back-end systems? What are your front-end systems? What processes do you have defined? What processes do you still have to define? What's your data quality like? What is your data stewardship, your data methodology? There's all these questions that come up that companies just aren't considering. So I think that in terms of macro and micro in the AI space, expectations are running headfirst into reality. And the market is very, very quickly going to start pricing that in some of these companies, in terms whether it's NVIDIA, Meta, et cetera, et cetera, et cetera. I think that's going to start getting priced in, and I foresee a bit of tension, a bit of a headwind in the sense of that now that expectations and reality are kind of smacking, and they're trying to figure out what's going to come out of that. There's going to be a lot of fear talk about a bubble. There's going to be a lot of fear talk about, oh, data centers are not going to roll out, so on and so on and so forth. But I think that in the next 18 months, everything will shake out. And sorry, that was a very long answer.
I think a good comparison is NVIDIA versus IBM. IBM, obviously, they're coming in and established themselves as such a strong leader early on, like, right, the personal computer. And then you look at the B2B side of all of these servers, and they established themselves, but then they got so big and bloated, they really didn't innovate. I think it's totally different how NVIDIA came out with NemoClaw so fast. I think that's, is really OpenClaw as this harness to harness agents and have, these recurring processes to get closer to an AGI type experience. You have NemoClaw come out as NVIDIA, like largest company in the world, and they have plenty of revenue. They have plenty of ways that they're already can maximize that revenue, but they're coming out with something to make it more applicable at the app layer. And that's one thing I think Avi had mentioned yesterday around the app layers. You also have Anthropic is starting to throttle back. They restricted OpenClaw, so they restricted the usage of Claude, unlimited plans or max plans using OpenClaw. And one thing we talked about on Wednesday with Sam Knight, new co-host, is that they just don't have the compute. Anthropic doesn't want people just endlessly using their models. They're more so, let's go to the next level of applicability and, how do people actually put the AI to use? And so they released their own managed agent solution, which is a harness, which is just like OpenClaw. And we talked, they could have had this planned all along, and Peter Steinberger just moved first with OpenClaw as the way to harness these agents. So I can't say that they are a second, third mover, but I do think that, to your point, there needs to be actual work being done. And the average person needs to be able to pick up one of these things, and they're not going to babysit a Mac Mini or Mac Studio to try to get it to work. So how do we get it done faster? The one thing I think is the players now or know that they have to move faster. So I know that OpenAI knows they have to move faster. Anthropic's already has made a ton of moves. NVIDIA, is like, oh, we need to make sure this is, not just people burning tokens. And then because it's going to run out. If you're spending thousands and hundreds of thousands and millions on just AI compute, but you're not getting actual business services or business value out of it, that runway is going to get shorter and shorter.
Well, so that's the thing with expectations versus reality. So again, I'm not trying to be the contrarian. I'm just telling you what I see and what I experience and what I understand. All of the hype around OpenClaw, in my view, is a lot of social media hype. The individuals that I know that are highly skilled developers that have been trying to use OpenClaw in their processes, they run into nothing but problems. There are a lot of issues that pop up. There are a lot of errors that pop up. There are a lot of failed processes that they run into. And that's because OpenClaw is good for someone that is looking to agentize their life. So if you are so for instance, someone like me, let's say that you have an LLC, let's say that you are an individual independent consultant, let's say that you work at a small startup. OpenClaw would be good for that, right? To a point. But even then, the problems with hallucination and the problems that exist in LLMs persist with OpenClaw, and they start to scale. Because the more you try to automate with it, the more of a problem hallucination and the other issues becomes, and that's how errors start to pop up, and that's how processes start to fail. So I know a guy that has a quite complicated but highly methodological, like it's a methodical process.
Yeah.
And he and I just had a conversation the other day. He said that he tried to use OpenClaw on his fully maxed out cluster of Mac Minis. So he's got like 4 of them, M3 Ultras with 512 gigabytes each, right? So he's got a serious setup. He said it didn't work. And when I went into detail, it was like, well, why isn't it working? He said, well, processes kept breaking. I kept running into issues when it came to cross processes in terms of having, and I'm simplifying here for the audience, having one process talk to another process with a bridge in between. He ran into a lot of issues with that. He found he had to babysit it. It is essentially the simplest thing, right? He has to babysit it. Yeah, right. So he couldn't just let it run. Now, an agent is supposed to be something that you can let run. They can do it autonomously, right? Not independently, autonomously. But what is the point if someone that's got $35,000 worth of machinery, if he still has to sit down and watch to see if everything goes through properly, because it misunderstood a particular set of instructions, it misreferenced a certain particular set of files or a code base. There are all kinds of things that happen. So that's the first problem. The other problem that you mentioned about compute is very, very real. I'm probably going to piss a lot of people off, but any talks about AGI are complete nonsense. We are at least a decade away from anything remotely close to AGI. And even if agentic workflows become a secondary substrate to the work market where they really start to take off, I don't think people are understanding what that means. You already talked about one of the problems, compute. That is a very, very real bottleneck, right? So what happens when people are starting to say agents are going to take over? Okay, so then company after company after company starts to implement agentic workflows, right? That's going to be more and more and more compute that's needed. The other problem that people don't talk about is bandwidth. If you have a future where you have billions of internet users and billions of agents, you're going to run into bottlenecks in terms of internet bandwidth. That's just the reality of it, right? Yeah. Then how are you going to power all of these? Where are all the data centers that are going to power all of these things? You need the compute, you need the data centers, you need the memory, you need the bandwidth. That's 4 things that we don't have right now. We're already running into bottlenecks as it stands right now. So that agents, 5 years before they become anything real. Where we're at right now with agents is where we were with ChatGPT in 2022. There are people making a lot of forward-looking assumptions and judgments, saying that, oh, this is huge, this is big, it's going to change everything. But as you see, if we put Claude 4.6 up against ChatGPT when it first came out, it's going to seem like, a scientist against a baby, right? That much growth has happened in just 4 years. We're going to see that kind of growth with agents, but we're not there yet. We're nowhere near anything close to AGI, and we're nowhere near to agents becoming another substrate to the working life. I just don't see it.
So do you think from like a stock perspective, there's been like this SaaS apocalypse, right? Been going on for at least 6 months, probably the last year, really. Yeah. Do you think they're oversold right now? Like CRM comes to mind as just like they've been getting crushed. I saw Elasticsearch has been getting crushed across the board. I think they've all been getting hit. Do you think they're justified? And do you ever see them reaching all-time highs again? What within, and then I guess the second question to that too would be, sounds like you have the same thesis as me in terms of like picks and shovels are not going to go away. There's endless need basically for like memory and other areas. What do you think some of the winners in kind of the picks and shovels of all of this are on your end?
Well, so the first part of your question with the SaaS apocalypse, one of my day jobs and essentially my primary day job is I implement systems, right? So that's Workday, that's Salesforce, that's a lot of different SaaS systems. Here's what I'm seeing. The market, again, expectations are meeting up with reality. The market started selling off SaaS because they assumed AI was going to take over. However, anyone on the ground level that's actually working day to day knew that wasn't the case. Mm-hmm. People need to learn how to differentiate between what these CEOs and a lot of prominent voices in the space are saying and what is the actual ground level reality of what's going on. Companies, by and large, that's hospital. So the ones I have experience with, there's everything from hospitals to banks to hedge funds to what have you. Hedge funds are often very technology focused, right? But they're often constrained by very, very strict requirements and very, very strict realities on the back end. So that's why they're sometimes slower to adopt new technologies. Hospitals, schools, banks, most people don't realize that on the back end, a lot of them are still on green screen systems.
Yeah.
So we're talking COBOL, we're talking AS400, we're talking a lot of ancient systems that are still on the back end. How do they make the quantum leap from green screen to Claude? They can't.
Yeah.
They're not prepared for it. So these are all the realities that I talk about that they tend to run into head first. SaaS is not going anywhere. SaaS is the level that companies need to go to and then integrate AI with SaaS. AI is not going to replace any of that. So that's one of the first considerations. Taking it further, if we are looking into AI becoming this all-encompassing thing, AI is not going to be able to take over everything. AI is going to need to be integrated with everything. It's not as if they're going to have an LLM that's going to be able to do everything for a company, that they're going to build their own internal tools, because all that's going to create is the same reality that I run into now at another level. The biggest problems that I run into with implementations, with new systems, with integrating new systems, is the fact that companies have built all these homegrown systems. So the fact of the matter is, you build a whole homegrown system, sure, that's a cost savings, but how does it communicate with another company? How does it communicate with the broader market? How does your data live on the web? Are you going to close everything off? I think that you can do that to a certain extent, but if you have an employee base and everything is closed off and everything is homegrown, what that means is you can never leave. You now have created another layer of stress on your business where you need developers to maintain it. You need systems engineers. You need all kinds of other layers of the corporation to support these homegrown tools. AI is not going to make it so that companies are going to have their own homegrown systems that don't need to integrate with anything externally, that they can do everything internally. That is not a reality that's going to exist. So the SaaS apocalypse is much overblown, in my view. And to the second part of your question, with regards to, if I'm remembering correctly, picks and shovels, who's going to benefit from this, who's not? I think NVIDIA and then everyone else. Until there is a fundamental challenge to their GPU supremacy, whether that be through TPUs, whether that be through LPUs, or what have you. I don't think that their position is going to be challenged. One thing I do think is that the growth is going to allow space for other companies to grow, like Google, like Amazon, who are taking their own approach to chip design. I think that they're going to be beneficiaries as well. Meta right now is kind of, in my view, floundering. They're trying to find their footing in terms of what they're going to do. And then you have companies like Apple, you have companies, that are more on the hardware side that I think are going to play a much larger role for other reasons. But most of the doom and gloom right now, again, coming back to my original point, is expectations and reality just running into each other. And people are trying to navigate the tension between those two.
I think Anthropic announced yesterday they were like exploring making their own chips, which just
Oh,
feels like a leap, right? They have the money, they're doing so much. What's your take? I think this is a really good one to for this week. Is you have even is it a Treasury Secretary or you had someone? It might have been Pete Hegseth from like the Department of War talk about Claude or Anthropic's like Claude Mythos. The new model they're teasing, and it feels just like a lot of theater around it. Like, hey, Mythos, like we released it and it, explored vulnerabilities over the past 20 years of software and found thousands of them in like, all of the legacy, a large section of the legacy software that exists. And there's so much fear around like it's so powerful. It does feel like even if Mythos is that powerful, you still reach the same bottleneck of like getting it in the hands of people. I also think politically, you're going into midterms, the more you scare people with stuff like Mythos is incredibly powerful, and you have people in the public that aren't benefiting, that aren't content creators on X. I totally agree with OpenClaw. It's like I spent more time, like a month, like working with ours, and he runs and he's doing well, but to get consistent work, the best thing is honestly getting in like Codex or Cloud Code and just like focusing on one task and just doing it for 40 hours and making something really good. So I feel like you're gonna have political pushback. Is the bottleneck is going to lead to political pushback. There's going to be too many like plebs and people that aren't benefiting from AI, that don't have huge positions in these, equity positions in these companies. They're going to say, wait, like we're slashing way too many jobs too fast. Like we're going to lock down. I don't know how exactly you push legislation to lock down Mythos and lock down these powerful models, but it can happen quickly. I definitely think that I'm very curious to see how it plays out.
so the thing with Mythos is that there's a lot of hype.
Yeah.
And if you think about it, like let's just take a look back what's been happening in the last 2 years. Every time a model comes out, what happens? Oh my God, it crushes everything.
Yeah. All the benchmarks.
Oh my God, how much closer to AGI are we? Oh my God, oh my God, oh my God. Right? Finding vulnerabilities in an old code base, I don't want to poo-poo it, but here's the two things. One, how does an LLM know to find something that exists in its training data? So it's pattern matching. How does an LLM then identify it? It goes into your code base, and if they give it maximum compute, it's obviously going to be able to find things, right? So that is not me saying that's irrelevant. What I'm saying is we have to really look into what that means. Mythos is really powerful. It was really adept at finding errors. It was really adept at finding vulnerabilities. It was really adept at finding things that people had overlooked. That's great. Do it again. Then do it again. Then do it again. Then do it again a billion times over. It can't. We don't have the compute for it. Compute, energy, memory. Bottleneck, bottleneck, bottleneck. That is why no matter how great these LLMs are, after a while, everyone starts complaining, oh, it's gotten dumber. So a lot of that could be user error because people don't think to themselves, have you started a new chat? Have you deleted some old chats when you're asking about random shit like tacos and all that from your chat history? Probably not. So you might want to do that first. Second, they're not getting dumber. They're hitting resource constraints. The companies can see these constraints, and then they have to resource allocate. They have to throttle things back. That is why it seems that it's getting dumber. But the way you adapt to that is you ask better questions. You have more structure to your questions. You have more structure to your prompts. And the companies have also take a look at what happens OpenAI, Claude, Gemini, Grok gets dumber usually around the time a new model has come out or is coming out. So, yeah, Mythos is probably great. It's going to be the greatest thing when they release it broadly for about 3 months. Then someone else is going to come out with an even better model, right? And then it's going to be the best thing for another 3 months. A lot of this is sensationalism. I think people need to sit down and really, just like you said, work with them. Spend the time, dedicate the time, use your compute with them. You're going to see that regardless of what happens in their performance, your output is still going to be disproportionately high. And that is why I don't think there's an AI bubble. Even when I'm noticing that these LLMs are slowing down, because I'm so methodical with everything that I do, my output is still incredibly high. And that is the other thing about expectations versus reality. And to the points that you guys raised about people laying off too many people and whatnot, the reality of it is that human compute, human effort with AI compute together is what's going to make this thing explode. It is not going to be AI compute replacing humans altogether. I think that anyone talking about that, look at their incentives, whether it's Jensen Huang, whether it's whomever, they're selling you a bill of goods, and most of the sensationalism around all of this is very, very overblown.
Yeah. I have to ask, I think for our
Yeah, I
audience.
just thought it was funny with Anthropic because I think there's a gap there. I was just going to say with Anthropic, I think it's funny that they're almost like they're going out there and saying this is going to take over, XYZ enterprise. And then there's a sales guy at Anthropic probably trying to sell into those same companies, so it's like they're eating their own, if they're actually able to do all of this, they're eating their own business in a sense of who they could sell out to. So that I just found funny.
Yeah. My question is on for our audience is making it more applicable for what they're doing day to day. So I want to ask around, Adrian, what's your process? Like if we're thinking around, like, what do you find most efficient? We've done things where like we have a shared Notion page where the agents use the MCP tools with Notion to write directly to one document. So Avi's agent's talking to my agents, talking to a contractor's agent, and they're all like building a shared knowledge base. We've also seen like OpenClaw can get super complex with cron jobs and a lot of other things. And so that's where I've gone back to using Claude Code, one task. Let's make this really good. What's been your typical setup now you find most productive?
So I typically stay away from. So I've stayed away from OpenClaw just because my systems have too many proprietary things on them and too much potential client information. I'm not going to open myself up to that kind of liability. Yeah. So my automations are homegrown. All of the code bases that I have are, so my setup is PC and Mac, and I have a repository of hard drives that both systems talk to, right? Where I'm referring to my code bases and things of that nature. So my automations are largely using LLMs to expand my code base and expand my automations, expand the analysis that I do. One of the things I'm spending a lot of compute on right now is actually sentiment analysis, where I've completely changed how you can model out sentiment analysis, and we can maybe get to that. But long story short, my workflow is not benefited by agents. The guys that I communicate with a lot use agents a lot, and their workflow is everything you just said, creating shared knowledge bases for users. So for instance, if you're doing a project and you have a lot of requirements and you're doing a lot of requirements gathering, they've created initial environments where you're taking requirements from different users, you're consolidating it into a singular repository where everyone can refer to it. So all the developers can refer to it, right? That's something very, very simple that they've done. However, again, this is just because of the kind of industry and individuals I speak to. They're not really using agents for anything too complex. Usually what I'm seeing is that it's done for shared repositories. For me, because of the liability, I'm not going to mess around with them too much with my code bases. Also because the little bit of experimenting I've done, it has taken me hours to track down a mistake, because my processes, they have everything from code to documents to frameworks to data frames to data sets to data lakes. When I have to track down a problem where something broke, it takes me longer to track down a problem using if an agent doesn't do it than just doing it myself. So that's kind of why I've moved away from any kind of agentic work. It just doesn't serve my workflow.
Yeah, I've found that happening a few times where I'm just like, I could have just done this. Like by the time I'm going back and forth, and it like breeds laziness, and I have to slap myself occasionally and say, like, you got to keep using your brain, otherwise you're not going to know what to prompt, at some point. Jody, do you have anything to wrap up here on the AI? Do you want to get into the end of the stairway to heaven that we talked about last time with Bitcoin? But before we do that, anything you want to wrap up here on the AI side?
Yeah, I think pulling it back in, we say we've thrown out the warm bubble today, but I think we also have to tie it to our Tuesday show when we had Sam Smarter Trader on. We're generally bullish on the short-term bottlenecks. We have long call options on DRAM, the new ETF that has SK Hynix, Samsung, MU. I think the fears around the new algorithm that Google came out with that can compress memory down, and this is not an area I specialize in. I think it's going to take a while for people to apply that. I think there's still going to be like immediate demand. 6 months from now, I'm not sure, but I mean, KT brought up a good point. He sees a lot of really big call flow for like the 900 calls on Micron for November, December, and those have picked up this week. People are looking past the war in Iran, and they're seeing CapEx spending in these, whether it's, fiber optics, whether it's memory. Yeah, it's going to continue. So generally we think so, but I think we need to also have these conversations to figure out, okay, this runway is not going to last forever. If you are a trader, then, make sure that you're being mindful of your positions. If you want to be long-term, this is not financial advice, but find good companies, find out, what you're buying is maybe too rich these days, and look long-term. And as always, buy Bitcoin. We think it's going to be still the hedge against all of this abundance of AI that is created.
Well, with that, so I even if there are bottlenecks, I don't think that the AI revolution is going anywhere anytime soon. If anything, it'll create a persistence in bottlenecks. So they'll hit one threshold, then they'll hit a bottleneck there, then they have to move past it. But this can take things into a lot of crazy places. So one of the outside potentialities that I think is that there's possible is that there's a big commercial real estate issue going on right now that is not getting a lot of cover. People talk about CRE being repurposed for like apartments. I think it's likely that CRE is repurposed for data centers because it's easier in theory to rewire and retrofit an existing structure than it is to build a new one. I think we can have a future where a lot of major cities have entire blocks of data centers of where there were old buildings for whatever business, there were old commercial buildings for whatever business, industrial buildings, what have you, that are repurposed for data center buildouts. You have an existing standing structure that already has power. It'll just be a matter of restructuring it to draw more power and retrofitting it to make it suitable for tier 3 and above, eventually, data centers. And I think that is kind of one of the things that people are not paying attention to. That can be a way that, as you were mentioning about the runway, I think the runway has a lot more legs in it. So I think this is going to be something that's just not going to go away. Data center needs were already projected to grow significantly without AI. And this is going back to like 2020. So with AI now, the need for it is just so extreme when it comes to compute, when it comes to memory, when it comes to everything, that I just do not see something slowing this down.
Yeah. As a real estate major, I will say, way easier to make a Class A office building downtown. Like, I worked in Atlanta. into a data center than it is to make it into apartments. And that's always been the conversion that, most people have talked about. It's like, oh, this is really hard with plumbing. If you try to install plumbing and make it for 20 apartments on a floor versus just running wires is complex, and there's challenges there with heating and cooling and noise, for the other office tenants. But plumbing's way harder than that to do. With
Plumbing is harder than cooling. I've heard that from a lot of people, that cooling is challenging, but running plumbing for like an apartment complex or anything is very very difficult. So I agree with that.
Yeah, it'll be interesting to see how that plays out for sure.
Remember Simon Malls during COVID? They changed to like Amazon fulfillment centers, and so they do adapt. I was just checking to see if Simon mentioned anything about that, but their CEO says they're not making an investment in data centers. Proactively touched on that. So, but a mall is a lot different than commercial, that have been office space. So
same thing with malls. I guess malls turning into big data centers too.
Yeah,
they are. Okay, yeah. I guess Simon's going to be behind there, or that's an old quote. I do want to touch on. Go ahead.
If you won't do it, someone else will.
Yeah. And then they'll be laggards in that. End of the 4-year cycle. Let's pivot over to Bitcoin. Last time you came on, I loved, I think it was your quote, stairway to heaven. We're not going to see these huge boom busts that we saw in previous cycles. The 4-year cycle does feel like, it more or less, we did see a big drawdown, right? Where's your head at with Bitcoin in general right now? Do you still maintain that stairway to heaven approach? Do you think now that we have come down that we do see, a rocket ship back up, or are you sticking with the stairway to heaven?
No, I still think the stairway to heaven is a likely outcome. Again, the stairway to heaven is like a 10-year time frame, right? So it is not as the overall thesis behind it is that I don't think Bitcoin's operated on cycles. I'm not sure it's operated on liquidity. I think it's operated on stimulus. So while stimulus can bring liquidity, it means two different things to the market. Liquidity from like lowered interest rates and things of that nature, that does impart upon the market more capital to start, putting money into the market and equities and assets and whatnot grow, right? But stimulus is what we've had. If you take a look at the stimulus that we've had since 2008, since 2009, so right around Bitcoin's inception, we've had very, very significant stimulus efforts that have disproportionately correlated with the run-ups in equities and assets. I think Bitcoin has been a recipient of that. I think that taking 3 to 4 data points and calling it a cycle pattern is a little bit presumptuous, because one, you're looking back on data with no context. So if you're only looking back and saying, well, we had a cycle and then we had this liquidity environment and that liquidity environment without looking at other factors, I think you might be missing a few data points. And then also, statistically, that is not significant. I don't think that has ever followed a cycle. I think it's been cotemporal with different factors, but I don't think those have been causal or even correlative factors by themselves. With that said, I still think and believe that Bitcoin is going to stair-step its way up over the next 10 years. After October 10th, the fact that we didn't drop down to 40K actually surprised me, because that was a wipeout event, and the market just hasn't. Well, the Bitcoin market just hasn't recovered from it. It sucked a lot of capital out of the market. It sucked a lot of leverage out of the market, and it scared off a lot of people. And I think that what we're seeing isn't a result of a cycle; it's a result of a wipeout. Is now people would say that, well, the cycle caused the wipeout. I don't think so. There's nothing causative that says a cycle leads to anything. You only perceive a cycle after the fact. It's a lagging indicator. You're looking at something in the past, saying that if it's a pattern, okay, great. But I can find all kinds of patterns in Bitcoin's data, and I have. That doesn't mean that they explain anything. It just means that they are an observable trend. So I think the 4-year cycle never existed. That's just my view. I think it's been things have been cotemporal. They have not been causative, and they've not been correlative. And I still think that the stairway to heaven happens over the next 10 years.
Mm-hmm. What's been your your take recently on MicroStrategy. Strategy continues to perform in a way that like it's hard for people to stomach, and like sentiment's been down, and we know that you talk so much about sentiment, and you're doing way more research than just us scrolling Twitter, and we would assume sentiment's bad, right, in the community. But what is when you really peel back the onion and you're looking at the data, what do you feel like that is, and do you feel like really the question behind the question is there going to be appetite, for people to go and take that risk for like an MNAV for something like a strategy or another treasury company? Let's say Bitcoin gets back, 75 consistently, 80, 85, 90, 100. Are people going to be disillusioned to where they just want to like hold, spot Bitcoin itself versus taking a risk on a company and having that corporate risk layer on top of that?
Well, with strategy, I do think that markets move on sentiments, and I have some fairly, elaborate and complex reasons as to why that is. But very, very simply, the market moves on sentiment, but sentiment can manifest itself in different channels. So if people look at price as the only indicator of sentiment, you would have the view that sentiment's in the garbage and no one's interested in strategy. But if you look at the options market, if you look at trading volume, you get a very different picture. And I've said this often, at times, even when it's barely above one MNAV, strategy's options market has been one of the top 10 in the world, along with NVIDIA, Palantir, other giants in the space, in the world, right, in terms of companies. So if sentiment were bad, why is it that the options interest is so high? Why are we seeing certain dynamics with call ratios? Why are we seeing certain dynamics with overall open interest? I think that people are taking a view of the market that price is the only thing that matters. Well, the thing I say to that is bias starts at basis. So if your cost basis is above what current price is, then price is going to be the only thing that matters. If your cost basis is below what price currently is, then you're probably going to be a little bit more open to reason and open to different views. But I urge people to look at things that with more than just price as their overall indicator. If they are a long-term holder, if you're an options trader, or if you're whatever, that's a different kind of thing. But talking about people that are holders, people that believe in the Bitcoin strategy, I would urge them to look at different data points to see how sentiment is moving through the market. So that'll be the first thing. I think when it comes to stretch has shown that the market has an appetite for a dividend-paying product. I think that says a lot about the current environment that we're in. People are just based on the trading volume, just based on what they've been able to do with stretch. It tells me that within this space, there is an appetite for capital preservation given the current market dynamics. Is that going to expand? I think so, and I think it will over time. I think that stretch and the other preferreds as well are going to have a much larger market over time as they hit steady state, but that usually takes between 2 to 3 years. So we're still a ways away from that before the truly big players really get interested in them. But strategy is, I said this the other day just on a different pod, strategy is tethered to Bitcoin. So people that are complaining about the price action, just take a look at Bitcoin.
Yeah.
Just and also take a look at the options market, take a look at the trading volume, take a look at all these other things that are indicative of where the market sentiment sits around strategy. I think you'll get a very, very clear picture of why price action is the way it is. But based on the analysis that I've done, the two primary drivers of strategy in terms of price action, in terms of potential attributable factors, are the options market followed by Bitcoin. And sometimes it's Bitcoin followed by the options market, but they're constantly 1 and 2.
Yeah.
And I think that says quite a lot about what happens to the equity price.
What do you think they need to do? And I guess 2-part question. First part, do you think MNAVs ever go, like they used to be? Or do you think they're going to get capped, to a certain degree? And second part to that question is what does MSTR need to do? Is stretch enough? Do they need to create, we talked about last time, becoming a bank potentially, to show that they're making money to even buy more Bitcoin instead of just continuing to take debt? Like what do you think if I'm talking my own book too, like I'm underwater on stretch or on MSTR, candidly. Was late to the game, went to Strategy World, got hyped up on it, and thought it was going to go to 1,000. I still believe in the long-term thesis. They have a lot more Bitcoin than when I first bought it, but the price is obviously still down. What do you think they need to do, or any of these treasury companies, to gain that attention? Because I think that's what we talked about. Attention, sentiment, that really drives these markets. What is besides stretch? What can these guys do to get the attention back? Long term to bring this back, and do you think we'll see another all-time high at some point for MSTR?
Well, I think that sentiment drives all markets. It's not just strategy. It's not just Bitcoin.
Right.
So that'll be the first thing. The other pieces of that. So what do they need to do? And this is something that people have given me criticism over, but I'm going to continue to say it because I think it's the case. They need to change the volatility profile of their equity, and they need to change how their company operates. That, I think the market is going to force that one way or another. I do not foresee a future, assuming they don't abandon the BI business and they stay with the current, I guess people don't want to say it's a dual model, but it really is. They do have a functioning business and they do have a Bitcoin treasury. So it is a dual business. Issuing shares to pay the dividends on stretch and then relying on Bitcoin price appreciation to drive up the share price, that is, I don't think that's going to be sufficient to have this thing scale into the hundreds of billions and trillions at some point. Could they get to that as a function of market cap by how Bitcoin goes because of their net asset value? I think they can get much higher. They already got over 100 billion once. Yeah. So I don't think why they couldn't get over 200 billion or 250 billion with that, right? But again, that'll be solely because of Bitcoin. That wouldn't necessarily be directly because of share price appreciation. To your point about MNAV, because MNAV is sentiment, I think it's very, very likely, if not probable, that we're going to trade above much, much higher. I don't think we're going to hit the highs that we saw where it was teetering over 4, and sometimes as high as, I think, if memory serves, it got as high as 5 or 6 way back when. Yeah. I don't know if we're going to get that necessarily, unless we have a real mania phase. But coming back to my point about stimulus versus liquidity, people fail to realize that what we saw in Bitcoin in terms of those crazy run-ups was in a stimulus zero interest rate environment. And I think that in Strategy's early run-up, they got the benefit of first mover advantage and some of that stimulus moving further and further out into the risk curve, which is why the price blew out in terms of MNAV early on, right? Now that stimulus has essentially been worked through the market and now the interest rates are much higher, we have an entirely different macro environment currently that exists. So there are a lot of things that can play into what goes into MNAV. If we have a frenzy environment, MNAV can go much higher. If we have a normative environment with normal levels of liquidity and interest rates do not appreciably drop much further, I think that MNAV is going to go higher, but I think it's not going to be as disproportionate and wild in comparison to Bitcoin, but it is going to go higher. What do they need to do? I think, coming back to my first point about changing the volatility profile of their equity and changing how the market views their equity, I think that long-term, they're not served by having hundreds of thousands, or maybe at some point over 1 million Bitcoin and doing nothing with it besides issuing digital credit. Stretch can grow, Stretch can become successful, but I do not think the market is going to view that as sufficient as a business model. It is simply not, unless they become a bank. If they pivot fully to a bank, that's a different conversation. But if they're still going to have the BI business, which by all intents and purposes they want to, because then if you think about it kind of functionally, they lose the benefit of the return on capital on Stretch if they lose the BI business. There are a lot of considerations with that. So I think the BI business is going to be with them for some time. The BI business is going to grow. Naturally, I think it's going to grow. I think that the Bitcoin net asset value is going to cause them to grow. But unless they get a catalyst in terms of the what else they bring to the market, whether that be through lending on the Bitcoin, whether that be through using other kinds of means to generate capital off of their Bitcoin, I don't know if the market is going to view their model as something that's going to be long-term successful. And it's possible that they will be successful, and I think they will be successful, but there are degrees of success. Is successful, digital credit grows, the company trades at like 1.5 MNAV, and the BI business doubles in the next 10 years, and the share price is appreciably higher from where it is right now, and they keep going forward. That is successful. That's not a failure. The world beater that everyone thinks that they're going to be, the projections about 1 trillion, 2 trillion, 10 trillion market cap, they're going to need to bring something different to the table to do that. And also, that is, again, coming back to my other point, that is going to be tethered to Bitcoin. Bitcoin growing in price is not significant enough to say that Bitcoin is successful. We're going to need to have Bitcoin integrated into the financial markets more than it is right now. And that is also what Strategy is doing. So they're serving that purpose as well. So there are a lot of things that go into this. And I gave you a very, very long answer, but that's just what I think about it.
No.
I think it's good to like ask of them of like they're doing the right things of like integrating into traditional finance. You see him at Morgan Stanley. You see him, Michael Saylor, that is. You see him, going and doing a road show. It takes time, right? And I think there's products that they are releasing. They've done 5+ IPOs, and so they're doing the hard work and doing the regulation, the regulatory side of going through those processes of doing it the right way, so that they can satisfy what an institutional investor would look for. But it will take time, and it's good to also call out that too many people like want to get a certain amount of Bitcoin and then sit and chill and think it's going to go to 1 million next year, and that's just it's harder than that. Life's harder than that. You have to go out and sell your product, especially with AI. Anybody can build a product now. You can just copy paste the code and put it in the cloud. So there's so much that it's on distribution and selling, and I think that it's healthy for people to look at it that way. I think that also we want to mention, we talk about options, but Saylor has never committed a certain strategy for and catered to options traders on MSTR. He doesn't want to. He is a long-term game, very much like buying Bitcoin. Satoshi never committed to having a certain, volatility profile with Bitcoin itself or adoption curve to where, your long-dated calls are going to be, the premium's going to jack up and you're going to get all that. It's a premium for a reason, right? So you're taking the risk that it's not going to happen in the amount of time, and it's going to expire worthless if it's the out of the money call option. And so we want to let people know, I think just with sentiment in general with MSTR, some of the people that are salty were also people that got really into the options that expired worthless, that paid a huge premium for them. And just know that we want to be very clear. Saylor has never committed to not using the ATM or catering his buys to make sure the stock price pumps within that time frame. He's always mentioned it's a long-term game, and right now he's not going to do actions that are going to make the stock price go up. I will mention real quickly.
So there's a point about that. I think that people don't really have a proper understanding of volatility and what Saylor is doing.
Yeah.
So the ATM has absolutely nothing to do with the volatility profile of equity, and I'll explain why. Very, very simply, volatility is the tension that exists between positioning in the market. That's what volatility is. That's what realized volatility is. If you take a look back and if you take a look at current volatility levels, the best way to understand it, in my view, is there's a tension that exists between positioning. That is what causes the price movements. People have positions. They're fighting for positioning, trying to express their sentiment into the market. Something is going to go up, something is going to go down, and what we see is, and what we measure as volatility is the observable tension of that result. Implied volatility is how the market thinks that tension is going to play out, right? Whether it's going to go up, whether it's going to go down. So implied volatility is sentiment about sentiment. They're just different dimensions to market sentiment. That's why I say that people need to think about how sentiment travels through the market and is expressed in different channels. The reason why I bring that up is this. There's absolutely nothing Saylor can do that's going to change that. It's going to be the market perception of the equity that's going to change volatility, that's going to play out in implied volatility. That's why I said that they need to change. That's why I use the phrase volatility profile. If they make the stock even more volatile than it is right now, we're going to see that play out in realized volatility, and we'll see that play out in the options market. We'll see that play out in the price movements of the stock as well. If they stay on this current model, can they be successful? And I think they will be successful. Yes, but there are degrees of success. I don't see them going to $1 trillion in market cap anytime soon outside of Bitcoin. So if Bitcoin rips to $1 million, obviously they're going to win, right? But it is going to remain tethered to Bitcoin. And that's what people need to understand. And that's what I understand. I assume is going to be tethered to Bitcoin. I don't invest assuming that MNAV is going to be 4, MNAV is going to be 5. I understand the dynamics of the equity, and I understand what's going to happen. And there's nothing Saylor can do outside of completely and utterly upending the model that's going to change that.
I guess, would you say though that like the August earnings call, they first provided, I remember driving to the Bitcoins for Everyone's conference in Portland, sat next to like Mason Ford at dinner, you know, from True North. And on that earnings call, and Jeff Walton was on there, you know, from True North, they did provide guidance on MNAV. And so then you had people on the Twitter timeline that were suddenly like, wait, okay, you know, like Saylor's going to like pause the ATM and they're going to run the stock up to 1,000. Do you believe that really like Saylor can't do everything with expectations on the volatility, but the way they provide guidance on how they use the ATM does affect like just this overall sentiment, you know, because there was other, you know, people are like, the stock's going to run up now, and they were buying call options. But then the later they changed that and they said, look, we're going to have to adjust this strategy on the ATM if we need to.
Well, the sentiment on Twitter doesn't mean anything. And sorry for anyone that's watching this, but the sentiment on Twitter means something for trading algorithms and what they may key in on. But there's no one on Twitter that's moving the market of strategy. And even if all of us collectively got together and started positioning ourselves, the market's not even going to move up a tick in terms of volume. So a lot of the noise on Twitter is just that, noise. Now, with that said, with regards to the ATM, this is why narratives and sentiment are so important. People thinking the ATM impacts the price and whether the ATM does impact the price are two different things. I don't know I think you guys are familiar with the fact that I've actually modeled out the impact of the ATM on the price going all the way back to inception to about December of 2025. The ATM has something like a 0.03% attribution to price activity, and that's positive and minus. So that's non-directional. There have been times where ATM is positively correlated with price, and there have been times where ATM could be theoretically negatively correlated with price. But the only way to see the price over time is to model it out and to do different things like a Shapley attribution and so on and so forth to see what the long-term effect has been. It's been negligible. That's why I keep trying to tell people about the options market, Bitcoin, sector rotation, the Bitcoin miners. That was a massive impact on the price for about 7 straight months. Mm-hmm. And then there's also rotation into the Bitcoin ETFs. There's all kinds of things that impacted the price. The ATM was just not one of them. Mathematically, statistically, practically, it just isn't. Now, with regards to MNAV guidance, that was one of the things I was critical of them on, because my understanding of MNAV and what it is, not what I think it is, but it actually is that there's nothing they can do to control that. So giving guidance on something is quite literally setting themselves up for trouble. And saying that, I think it was kind of a faux pas, because they were listening to the noise online and they were trying to address it.
Yeah.
In trying to address it, I think they addressed the wrong aspect of the market. Addressing the noise around the ATM, the noise around MNAV, that's more about investor relations than about forward guidance. Because markets are forward-looking, but MNAV is sentiment. You cannot forward project how the market's going to rate your equity. If it's trading at a multiple, how do you guarantee a particular multiple? Can't. There's nothing you can do mechanistically. There's nothing you can do from a financial engineering standpoint that's going to change that. And I think that people are realizing that now, and that's something I got a lot of criticism for, but I kept saying it. I'm going to keep saying it. What we've seen in the Bitcoin treasury space with all the MNAVs compressing isn't compression. It is sentiment shift. Sentiment in the space is down. Therefore,
it is down.
MNAV is down. across the board for all of the companies, and that is what we've seen. So the guidance around MNAV, I understand why they did it, but do you see how they had to pivot away from it very, very quickly when they saw that, quite frankly, one, they may have misspoke. I think people thought 2.5 was set in stone, while in the actual SEC filing it said at management discretion. Now, when they saw in the market that they had the trading volume to justify issuing shares, were they going to sit on their hands and not issue shares because of guidance? Or were they going to use management discretion? They chose to use management discretion. And the problem that the people on X had was that management discretion, one, they didn't read the fine print, and two, it came a lot sooner than people thought. And some people call that, some people criticized them and said, well, that's not fair. You shouldn't have to read the fine print. It's like, what world are you living in? You have to read the fine print. Everything you buy, everything that you own, everything that you invest in has a fine print, and you should read that. Was it on strategy to explicitly call out the fine print? I don't think so, but I can see the justification as to some people thinking why they should have, but people just really understand what they're investing in. I think is quite literally the main problem.
Yeah, I think two things could probably be true at the same time. Like yes, people should take the responsibility to read that, but I think it maybe threw people off if it is the responsibility to read it first and foremost. But I do think that if they're saying something, people are going to tend to listen to that probably. So,
well, when Saylor says the ATM is not driving price, people didn't listen to that. So people are having very, very selective listening.
Fair. That is thin to it for sure. Jodes, are you going to be at Bitcoin Vegas?
We are going to be at Bitcoin Vegas. So we're excited.
I know you are. Sorry, is Adrian going?
Is Adrian going to be there? Well, I will say one sec for our audience. If you participate in the Friday giveaway today, we're giving away 21,000 sats, 200race.com/stack. We will select one entry to get a free ticket to the conference. So roll up. We'll be here. Adrian, Cher, are you going to be there?
Leaning towards no. I think I want to take some time off. I've been burning it at both ends for quite some time, and I think I might want to take some time off here before I take on another project. But I still might go because I'm here. I'm close to Vegas, so it could just be a drive. But as it stands right now, I'm leaning towards no.
We are going to be there, Jody, and tell our listeners how they could potentially get a free ticket.
Yeah, so participate in the giveaway today, and we'll be selecting one participant there. And we're excited. We'll take your email. We'll send it to the BCC Inc. team, and then you are going to follow up. They're going to follow up with a free ticket to the conference. We're excited to participate in that. Actually, want to bring also talk about real quick. One of our sponsors, Arch. We did an event in New York. One thing we talked around was they've had some high net worth individuals that have come in and used. Bitcoin loans have now dropped below double digits, and so. High net worth individuals taking out 8.5% loans and then buying Stretch or SATA and taking the margin difference in the dividend that they're getting. I think Stretch 11.5%, SATA 12.4%. Adrian,
something like that.
Yeah, and so if you have the size, and it is a sliding scale. You have the size. I think it is super interesting. Not financial advice. Don't go out and take out loans without it. But if we have Adrian on, we always have to bring up, I think, the really interesting looping of getting that interest margin there.
I mean, I've used Bitcoin loans in the past to great success, but again, not financial advice.
Mm-hmm. Should we go to our quick ad reader? We can wait till the end as well. We'll
wait to the end. I do want to ask Adrian real quick before we go, if you don't mind. Iron, Nebius, Mara, all the Bitcoin miners that have pivoted. I know that this was a trade you were early on. What's your take now? What's your feeling? You don't have to go into the financials of each one, but it's more so like your sentiment on the space. Is there a HPC AI demand there? Still makes the sector interesting, or do you think the potential pivot has already been front run and someone like Mara's too late to the game, selling at the bottom?
So yeah, one of the things I talked about back in like early 2024 was that HPC and AI, that the miners are going to pivot to that.
Yeah.
That's something I was saying very, very early on. And I also said that I was never bullish on Bitcoin mining. I was bullish on HPC AI. That's something I was very, very consistent on. I've exited all my positions. So I made what I made and I moved on. Do I think that the pivot is done in the sense of that there's going to be more money made? No. I think that there's a lot of room for growth still. What we're seeing right now is that the Bitcoin mining space, given the pivots, ironically enough, and here's just my read on it. The companies that were first to the pivot and that were signaling to the market that they were going to pivot disproportionately benefited, right? So we had Cypher, we had Iron, we had Wolf. That's when I exited, when they made their big run-ups, right? Now, the reality of it is that the companies that are doing it now, ironically, they could be signaling to the market that they're reacting versus leading. So what I mean by that is, you saw what other companies were doing, other companies that perhaps saw a trend, other companies that perhaps were positioned to take advantage of it, they did so. Now it may inadvertently give the impression that you are doing it just because they did it, versus you actually have an executable plan and a forward-looking plan that you actually are trying to capitalize on. That said, regardless, as we discussed earlier, the need for compute, data centers, etc., that is not going away. So these companies are not going to be hurt by moving into that space at all. And they're not going to be hurt by expanding further in that space at all. And I think that miners, sentiment drives things. They're going through a cyclical sentiment downtrend right now. The perception around them has changed. The narratives around them has changed. I think that they're the ones that navigate this storm are going to be, very, very well positioned when the market turns. But right now, and again, this is not me being political. If we just look at things from a macroeconomic, geopolitical standpoint, we've had a lot of chaos in the last 18 months.
Yeah.
So I think that people should be mindful of that. And the thing, I keep saying the same thing. If you are able to hold on and weather the storm and just, plug your ears a little bit and step away from, Fidelity, Robinhood, whatever, I say do so. If you are someone that is overextended, I would suggest that you reposition and perhaps reassess what you're positioning, solely because all it takes is one tweet, one Truth Social post, one news thing, and then next thing you know, the S&P 500 loses $1 trillion, and then it can gain $1 trillion, and then it can lose $1 trillion again. So we're dealing with a lot of chaos right now. So if you can weather the storm, if you can hang on, the long-term narratives on a lot of these things have not changed, and I think that's the case.
So I tell Jody to shut the computer down on red days. Don't. It's way too easy to. I've done it before, and that's something I learned is just like don't trade off emotion, because things can change very quickly, and you never want to sell when you're in one of those manic states that I've been in. And you see the
log
market.
Out and walk away. It saved me more than once in the past. Log out and walk away.
Yeah, and then the next day, things, especially with Trump in office, he tweets one thing, the next day it flips. Fridays are usually the day that he says things over the weekend too. So we'll see if anything is said heading into that. But anything else on your mind that you're like, I need to tell the world about recently that's interesting?
Well, the True North team, we've launched a website, tnorth.com, where a lot of us are putting up writing, research, analysis. I have some stuff up there, but I'm more of a long form writer, so the first thing I put up there is like 40 pages, so I apologize. But if you want to get a breakdown on market sentiment and how I think it truly drives the market, it'll be under research, and then you can find it there. But we also have an entire page for digital credit. We have events, we have about pages, we have everything. So we are pretty proud about this. A lot of work went into this on the back end, and it went live a couple weeks back. Right. We're still doing the True North streams on Wednesdays. I haven't been participating in those. As I mentioned, I've been very, very busy, so I've been stepping away from those. I'm going to start doing more True North now, which are more of our one-offs, where I'm, interviewing guests and interviewing different individuals in the space. But I'm going to be doing more things. I'm going to be doing more like Bitcoin, but yes, Bitcoin, but also AI, robotics. I even have different people doing different levels of analysis in terms of like options trading, sentiment analysis, things like that. So I'm going to use that to branch out to newer topics and different topics. But yeah, that's about it.
Love it. Well, always a pleasure. Adrian, we will let you go. Have a great weekend. And if you do make it to Vegas, definitely let us know. We'll have to meet up there. And for those listening, definitely check out 21rates.com/stack. The code word today is Masters. Can win 21,000 sats. Going to give a quick shout out to our friends over at Arch. You guys probably did the hard part. You bought Bitcoin, held through the noise, but you did not panic sell. However, real life does happen. You got to pay taxes, opportunities pop up, maybe a house, maybe a car, and selling Bitcoin just feels wrong. That's exactly why Arch exists. With Arch, you can borrow against your Bitcoin instead of selling, get the cash you need today, keep your Bitcoin, and never trigger a taxable event. Check them out, archlending.com. That's ARCH lending.com/daily stack, and they will give 1% off their lowest rate. So, Adrian, next time you take a loan, make sure to hit that daily stack promo. Jody, send us home for the weekend. You got your Masters green. Any predictions for who's going to win?
Let's pull it up. Not the whole Masters, but let's pull up what the market is right now. So this is the one I created. I created it last week for 2026 Masters on Predicts. So daily stack. This is our first market. 147 trades, 49,000 sats in the market. So for those not familiar, Bitcoin-based prediction market. Everything's in sats. Everyone can be a market maker, so you can create your own markets. 2,000 sats is like what you need to seed it. So less than $2, you can be the winter mute of the 2026 Masters tournament or whatever market you care about. Scotty Scheffler is still the winner, but what do we got? No, other has passed, and Rory McIlroy in second. So sentiment has shifted. It used to be Scotty Scheffler is the clear leader, but then now we're playing other on here, and I'll be tuning in after this to see the Masters leaderboard.
Love it. Well, hope everyone has a good weekend. I got 2,000 people about in the room today, and make sure to follow us on YouTube. Give us a follow. Definitely follow Adrian. He's got a new handle, but it's at Adrian _. We'll tag him in the post, of course, but definitely give him a follow. Follow our friends over at True North. Check out their website, and everyone have a fantastic weekend.
Thanks everyone.
Later, guys.